name is Chidambaram. I am representing ISACA Muscat. I am the Additional Director for CISA certifications. How many of you watch IPL or following the IPL? I follow the IPL. Okay, today's match is who and who? Okay, MI and GT. Which is who are you rooting for? MI. What if MI and GT are playing together in the same match with the same team? How do you feel? That is what is happening today. ICAI and ISACA are like MI and GT, but they are playing together in the same team today. So it's the one of its kind meeting, the first of its kind at least for this year. So we are all excited. We have members, guests, board members from both segments of society. We have the best of brains from IT, from finance, from audit, from risk, from governance. You name it, you got it. You have all the whole shebang today. Okay, so before we get started, I request everyone to get settled down. If anybody is there in the refreshment area, you can ask them to come down. Okay, before we start, okay, one important thing. If you're paying attention today, it will show. You know how, why, or how? No, there is no lucky draw, but you are really there. There is no lucky draw as such, but our speaker for the day, our distinguished speaker, is a published author, formally, I think recognized by ICAI and many other bodies. So the lucky person who will answer a question based on today's session will get a signed copy of his book today. So, get settled. Okay, pay attention. It will actually pay. If you pay attention, it will pay today. Okay, so that's where we are at. I will. So, as I said, today is a joint effort of ISACA and ICAI. It's the best of brains under one roof, and that roof is CBFS, who is the common sponsor for both the associations. So CBFS goes a long way, and we thank them for this venue, for all the support that they give us over the years. And ISACA is celebrating our 25th anniversary this year, so we are packing in a lot more events. This is one of those events which, unique event which is happening throughout this calendar year. Now, okay, before we start, I would like everyone to rise for the ICAI motto anthem.
सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः तदेव शुक्लं तद्ब्रह्मा तस्मिन् लोकः लोषधः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
Okay, please be seated now. So all goosebumps, that was the inspirational, the song to start the evening. Now we are going to proceed. I'm going to call upon Mr. Gaurav Kapoor, Chartered Accountant, Chairperson of ICAI Muscat Chapter.
Hello. Good evening, everyone. Welcome to the members of Information System Audit and Control Association called ISACA Muscat Chapter, and also the members of Institute of Chartered Accountants of India Oman Chapter, and also the members who are dual, who are members of both ISACA and ICAI Oman Chapter. So double welcome to those members. This is not the first joint event between the two chapters. And we are proud to have this collaboration between ISACA and ICI Oman chapters from time to time and on a continuous basis. So my thanks to my counter president of ISACA, Mr. Mari Punya. He's not here today. However, Mr. Badri, who is our treasurer, is also the vice president of the ISACA chapter. So thanks to Badri ji and his entire team for their support in having this joint session. I also extend, we saw that 25 years of ISACA this year. So I hope when you have the grand celebration, you will invite all our members to be part of that celebration. So I'm extending an invitation to them on your behalf. I also extend my welcome to the esteemed speaker for this evening, CA Bharat Jeswani, a highly accomplished professional with global credentials, and he's going to cover a very interesting topic for today's session, AML audits, ensuring compliance and detecting red flags. And just for information of some of the members, I know some of the people here know, as the others are also representing as AML champions for their organization. I also had that hat separately and was also involved in the FATF review of the Oman government that took place last year. Some of our members here were also part of that, so they are aware of what I'm saying here. Unfortunately, I can't share more details. There's a lot of confidentiality behind it, so just for your information. So you can expect some interesting questions from those people here. They know much more depth in knowledge of AML. So we look forward to your expert session in a short while from now, and my colleagues will give more detailed background to your achievements and qualifications. We as a ICI Oman chapter also runs a well-being club that we do event every weekend. So we have shared the details in the past with your president and the vice president. I would request the vice president to refresh that message to them, and we welcome all the participants. It's done on weekend mornings. Why we are here? We are here for networking, right? And better collaboration between the chapters. And if you read more articles or details about networking, it is said that the networking in non-CP events is much better than in the CP events. So just take into that consideration. So I would also like to announce here that as part of being both the chapters as being part of the sponsors of CBFS, based on that, CBFS also does an international conference which is supported by all the 6 sponsors chapters. And this year that event is being led by ICI Oman chapter, and the event is being held on 20th May 2025, 2 weeks from now. So do make an effort to attend that. The theme of the event is on sustainable finance and green banking. More details will be shared by the respective chapters in their WhatsApp group, so please make an effort. There are high-profile speakers that are flying in from outside as well, so I'm sure that event will be helpful. But on the other side, will also be launching a souvenir, so I request members of both the chapters to submit the articles if you have anything of interest related to the theme of the seminar or the international conference. I'll also take this opportunity to mention about, this is just for our ICI Oman chapters. As you know, we have entered the month of May, and we have our AGM that takes place in May. So another 2 weeks from now, I will be saying goodbye to my chairmanship, and there will be a new chairman that will come up. So all the best to the new upcoming chairman. I don't know who it will be, but hopefully will be someone within the current committee. And it is being planned on 20th of May. As of now, we have a tentative confirmation from the president of ICI to be there for the AGM as well. He has 2 flights to Singapore and they are just cross-verifying which flight can work out and whether he can attend our AGM in full or half. So more details on that, but considering that, keep your day it's going to be a bit more easier than you might have thought. So I'm sharing this upfront so that you can plan your day well in advance. That's it, I think. That's the key points I had highlighted for today. And of course, I don't know exactly when the ISACA chapter memberships get renewed, but for us, 31st March is the deadline, so our memberships are already due. So if any member have not paid, and I on behalf of ISACA chapter also, I say that if your membership fees are renewed, so please pay to your respective chapters as you celebrate 25 years. And they are going to extend an invitation. I know they need big funds. Yeah. I was also informed that Mr. Gopal is here. Yeah. So if you need to have any 2-day web-based IFRS and Indian Accounting Standard training, there is some program. So get in touch with Gopal after the session, and he can give you more details. So once again, thank you all, and let's make this session impactful. Thank you very much.
Thank you, Mr. Chairman. Now, okay, on to bigger business. Questions are coming, but no book prizes for this. Okay, I'm telling you that in advance. You guys have heard of symbologists, right? Symbologists, people who study symbols. People who study old things, archaeologists. But have you heard of fraudologists? We are having a fraudologist today right in front of us. He is a frauditor, he is the fraud auditor, he is the fraudologist. He's going to make us all frauditors and fraudologists today. But to welcome him,
Not master of fraud, right?
hopefully not, hopefully not. Maybe that also, but you have to learn what to steal to know what to catch, no? Okay, so to welcome him, I would like to call upon CA Ashish Subedar, who is the Managing Member Committee of ICAI Muscat Chapter.
Thank you, Chidambaram ji. CA Bharat Jeswani is a distinguished forensic accountant with over 15 years of expertise in forensic accounting, fraud investigation, due diligence, internal audits, and AML compliance. He is the author of acclaimed book, The Frauditor, which has been officially approved as a study material by ICAI. A big round of applause for CA Bharat has significantly contributed to the profession as a member of the expert team for drafting forensic accounting and investigation standards and has helped shape the ICAI curriculum on forensic accounting. As a visiting faculty of ICAI, he combines strong academic knowledge with practical and real-world experience. A certified fraud examiner, certified forensic accountant, and certified anti-money laundering specialist, he has trained officials from the CBI, collaborated with income tax departments, and served as a consultant to the Directorate of Revenue Intelligence. Having addressed over 50 professional events, CA Bharat brings a wealth of knowledge, practical experience, and deep investigative acumen to every session. Please join me in welcoming CA Bharat Jeswani.
Thank you so much for the very warm welcome. And I must say that, I've spoken at many events, and you always get the vibe wherever you go. And since the time I've come to Muscat, I have met only warm people. Everybody is very kind, everybody is very sweet.
Yes, the weather is also very warm here. So I come from Nagpur in India, and it is also very warm. It is it was named the second hottest city on earth just few days back. So, and also interesting things, sir said that will I also teach how to commit financial crime or to do fraud. And it is a very interesting thing, because if you want to actually investigate, if you want to be a good investigator, you need to know how to commit, you need to think like those criminals, and it comes very naturally to fraud investigators. It is again a moral decision, which side do you want to be, but it comes very naturally. So this session is going to be very interactive, okay? And there is not going to be one question in the end, which I am going to ask, and which will lead to my book as a prize. But whoever is most interactive all throughout the session, they would win it. Okay? Yeah, we've changed the rules of the game. So, because I'll be just talking a little bit about anti-money laundering audits. I think everybody, mostly they know how AML audits are, what FATF is talking about, what kind of regulation is there in Oman. That is all theoretical. People are well aware of most of that. So we'll be spending lesser time on that. And then there will be 10 case studies, 10 real cases, which are not all based out of Oman, rather just 1 or 2 of Oman. Rest of them are from UAE or India or Singapore. But I have converted them so that to an Oman case, so that you can relate to it. So we will be discussing those cases. I will be bringing in the context of the case, and you will be telling me, how money laundering is happening and what would be the audit procedures. Okay. So this is all okay. We'll be discussing some key anti-money laundering techniques. What kind of red flags, how do the system auditors, what do they look for during, AML system audits? And then we'll be also, of course, bringing in from the FATF perspective to Oman-based perspective, which is more relevant to the audience. Next, please. Okay, so what is AML audit? It is basically a systematic evaluation of organizational policies, procedures, systems. That is, organizations need to comply with the AML laws. Every country has an AML law. In India, it is PMLA. In Oman, it is again AML. So, FATF is the body which is a non-government body that creates some recommendations, which is a global body that wants to prevent money laundering and wants countries to detect money laundering, prevent and detect money laundering. So they will come up with recommendations, and then the countries will come up with their own laws to make sure that those recommendations are followed. And why would any country come up with a AML regulation? Because if they do not, then FATF would either grey list them or blacklist them. And if somebody is grey listed or blacklisted, then nobody wants to do business with such organizations or organizations that are working in countries that are blacklisted. So that is the reason why all countries would try to fall in line. What is the objective of an AML audit? To ensure that when you are doing an anti-money laundering audit of any organization, what is the main purpose of that audit? So you have to make sure that that organization is complying with the laws of the land. Whichever country that organization is operating in, they are complying with all the laws that are for AML. That is the main agenda of any audit. Recently, I had attended a conference where from the Indian FIU, some senior officials from Indian FIUs had come, and they were discussing a problem. And the problem is that banks that are the reporting entities, they are doing minimum compliance. All the reporting entities are just doing minimum compliance. And they were saying that they are not investing heavily on the tools and softwares that are required for anti-money laundering compliance, and they would just not try to figure out if there is any suspicious transaction, if there is any money laundering happening. What they are trying to do is, they are just making sure that they are complying with the law, bare minimum. And that was their problem. That why are the banks, the reporting entities complying at the bare minimum? What do you think? Anybody? Cost. Yes, sir, please.
See, as far as my knowledge goes, this was way back in 97.
Okay. No, but you don't answer my question. My question is, why are banks doing minimum compliance?
If they do 100% compliance,
Yeah.
it's most likely to lose business.
Not to?
It will take time to do that work also, no?
Okay.
They want to avoid that.
Okay.
Too much time.
Okay. Yeah, ma'am.
So there is more cost, plus there is resistance from the customers to fill up all the information.
Okay.
And it is also additional cost to the bank or the financial institution to put in all the controls, tools, software. That also is an issue.
Okay. So basically the point is that if I am doing an AML compliance, it would be, I'll be talking in Indian rupees because I'm more comfortable with that. So those softwares and the resources that I would be applying, that range from 2 crores to 5 crores Indian rupees in a year at a branch. So that is the cost of preventing money laundering through my bank. Okay. Now, what do I get by preventing money laundering through my bank? Does it lead to any kind of profit? No. It is the government's perspective that they want money laundering to be prevented in the country. But for that, I am paying. I being the bank here, I am paying so much money so that I can help the government to prevent money laundering. Second, these customers who are laundering money through my bank, who are transferring huge values of money through my bank, they are the ones who are bringing me maximum profit. So the government expects me to lose on my profits and spend so that money laundering can be prevented for the country. And I don't think any business is that moralistic. So in a practical perspective, wherever I have done AML compliance, wherever I have done AML audits, in theory, what you need to do is you need to make sure that the organization, whichever you are auditing, is having a very robust anti-money laundering system. It has the most powerful tools, and they are doing maximum reporting. There is very few false negatives. All those things are there. That is what theoretically it is supposed to be done. But when you go to an audit, what the real agenda is, that are they doing bare minimum compliance? And that is what it is going to be also whenever you are doing an audit. So that is the reason why when the software companies are trying to sell AI based very powerful tools that can detect money laundering, nobody is interested. I mean, people show that they are interested, but really they are not interested, because they just want to make sure that whatever the law is in that country, that is complied. So what do you do in an AML audit? You review the KYC, because these are the components of anti-money laundering in any entity. For example, we are taking a bank because they are the most sophisticated people who need to comply, because they are the ones that deal with high volume cross-border transactions mostly. Banks, insurance companies, money transfer agents, these are the people who are more on the forefront. So banks need to have a good KYC system. They need to know your customer. Now in our session, we'll be discussing that it is very important to find out who is the ultimate beneficial owner, which is all the countries are saying that you need to record who is the UBO, But when you look at the law will only talk about KYC in most of the countries. Even though they want you to, FATF says that you should go to the UBO. But there will, in most of the countries, there will be some vague definition about UBO, and there will not be a mandatory compliance. It would only be a vague way that, but yeah, you need to do KYC. So we need to look at KYC. Transaction monitoring is the most important aspect because there is so much volume of transactions, and that is the one that causes the major expenses for reporting entities like banks. So transaction monitoring softwares are very sophisticated. They are becoming more and more sophisticated with coming in softwares that can, using AI, that can predict what kind of new money laundering techniques are coming in. They can self-learn. Those that use machine learning and AI to self-learn and update their own rules. So very expensive softwares are coming, and that is very important. You need to be an information systems auditor in that case, so that you can understand those systems and you can ensure that those systems are giving you the right results. So that is where ISACA comes in a very big way when it comes to transaction monitoring systems. STR process, you need to see that if whatever the reporting entity may be, are they filing the STRs when they are supposed to file, or many transactions are just going without being noticed. Internal controls, overall, are there internal controls to manage the whole AML process? Are the employees trained? Are the employees understanding the process? Are they capable? All those are also there. And it is not, there will be a case also, it is not just about having a operational effectiveness. Not just about the policy existence. So many cases we have seen wherein the organization, they have a very detailed AML policy. Okay, very detailed. It will give you for every, there is a KPI, there is this process. So when this happens, this has to be reported, this has to be done. But what do you know about the effectiveness? Is it really effective? Is actually anything coming out of it? So when you actually do the audit, you need to make sure that it is not just on paper, but what those policies are, has it been actually been followed? So if these policies are there, probably there must be at least 20 STRs that might be generated in a year. But when you do an audit, you realize that they have not filed even a single STR. So are they actually that effective? Are they actually doing the work? Yeah, next please. So we'll broadly discuss all these key FATF recommendations. I'm sure everybody knows FATF, right? Yes, and it is the rule-making body, the recommendations, and I told you why, because the recommendations that they give that need to be followed by countries so that they don't fall in the grey list or blacklist. Okay. So customer due diligence is recommendation 10-12, CDD, EDD, ongoing monitoring. What is customer due diligence? Knowing the customer. That is KYC. Know your customer. What is CDD?
Due diligence is like doing extra, dealing with extracting more information about the customer.
Yes.
Yeah, not only doing the KYC.
Right. Why would we do that?
For example, sometimes if you do, for example, the KYC, some data will be hidden, so you don't know that data.
Okay.
That will do the customer due diligence, exactly. And other than that, also when you are doing the KYC and you realize that there is some suspicion, there is some possibility of illicit financing or transactions that are not, then you would want to do the CDD. Then that leads to EDD, that is enhanced due diligence. That is again, once CDD is CDD is a rule. It is being given in the rules itself that, when you come across something like this, somebody who is politically exposed or somebody who is doing business in a country that is known for tax evasion or tax haven or with some lot of secrecy, something like that. So you need to do CDD. Then beyond that, if you find out something and it is still not clear, then you do the enhanced due diligence, that is EDD. Okay. This recommendation also talks about ongoing monitoring. So what auditors should examine in relating to this recommendation, that is this CDD, it is done only at the time of onboarding. Everybody will be doing the customer due diligence, KYC, if required EDD. But this should be a continuous process. It should be periodic or whenever something changes about a customer. So you need to look at that is it being done on a regular basis or is it just being done once a year? Are there rules that trigger enhanced due diligence? This recommendation 10-12 also they talk about beneficial ownership. But as I said, in most of the countries, even including Oman, there is a very vague definition when it comes to beneficial ownership. And most of the countries are not complying with beneficial ownership. Very recently, there was news about Switzerland. So Switzerland, everybody knows, has been known for illicit funds. Earlier, it was the numbered accounts, which were very popular. So if you have black money, you just put it there and you have your numbered account. It is not linked to any person. It is just a password which can help withdraw the money. So recently, I heard about their UBO register. So their UBO register is, first of all, it is not going to be public, which defeats the whole purpose of having a UBO register. Because if I cannot verify somebody from that register, so it is just with them. And they do not have, secondly, the UBO register is formed by whatever information is being submitted by the company itself. So if I am a shell company, I tell them that XYZ person is the director and the ultimate beneficial owner. I tell them. So there is not going to be any verification from the government or any ministry or somebody, some enforcement. No, they will just accept it and they will not keep it public also. So this is what I am trying to tell you. This is the news about Switzerland I read almost 10 days back. And this is the same thing in most of the countries. They just keep it vague. Recommendation 2021 is about reporting on suspicious transactions. So we have to see, do they have a STR policy? Do they have, are they reporting on, there is also one thing, do they tip off the people? For example, if I have some reporting that I need to do on suspicious transaction of say XYZ company, I know the director of XYZ company. So I will file the STR, but I have to make sure that I am not telling or they don't find out that an STR has been filed against them. So you need to check that is the bank doing that. Are STRs filed on time? These are all very generic. As I said, it is very boring. I don't know why you are just all being so nice. I'm just getting into the cases. That's why I'm saying this is.
Maybe a case study like AML.
Yes, sir. You want to say something? So those on the screen, FATF is Finance Action Task Force. NCFI is National. Even I don't know that. Let me just.
It's National Center of Financial.
Yeah, National Center of. Yeah, that is where you report. Okay. In Oman, that is where you report. That is the NCFI. And DNFBPs is designated non-financial business and professionals. So now that it applies to those people also. So I was coming to that. We'll just talk a little about DNFBP. So now, since a few years, accountants, lawyers, people like us, we have also been included in the AML. Why? For the simple reason because there are some bad fish amongst us who are helping criminals launder their money. So they want to stop that, and they have increased some kind of reporting requirement. So there we need to verify whenever we are taking up a client, when we are incorporating a company for someone or we are advising some client, we need to ensure what if they are not into, I mean, we have to figure out if they are not doing any kind of money laundering. That is the purpose of including DNFB. So there we will be looking at the sources of funds, where the money is moving, if they are doing any kind of round tripping. Again, it is a very minimum requirement, but it is a problem because accountants are not using any kind of sophisticated tools. So because they don't need also, they are not dealing in transactions that are millions of transactions in a day like a bank. So for that reason, they don't need to deal with huge volumes. They need to deal with very few people and few transactions. So, but because of this relaxation, which most of the accountants or lawyers feel, they don't do any AML, which is riskier, which is very risky, because if we don't, and any time an AML audit or AML scrutiny happens, it is very, so you need to be aware of what we need to do when dealing with respect to AML, what kind of records we need to keep, what kind of processes we need to follow, and when we need to submit an STR. There is suspicious transaction report. A suspicious transaction report is a report when you find some transaction as suspicious and you feel that you need to report it to the authority, which is in our case NCFI. In India it is called FIU. Yes, yes. We have to, yeah, that is what DNFB has, we have to follow. But if they do not, most of them are not following because, as I said, many of them are not aware of it, and many of them are not following those processes. Is it not true? Okay. Okay. So there is a serious action that is happening against. Okay. Okay. So we'll start with the case. Before that, we'll talk about risk-based audits. So anybody, people have been in the auditing profession, all of you. What is a risk-based audit? Anyone?
Prioritizing the approach on the high risk areas.
Okay. Yeah.
So a risk assessment is initially conducted.
Okay.
On the basis of priority, high, moderate, low.
Okay.
In high areas, the frequency of reviews will be increased, and some areas will be focused in detail.
Okay.
And then moderate low will be taken on a less frequent.
Okay. Perfect. So why do we have a risk-based approach? So earlier, for many years, what was happening, that AML compliance was very rule-based, wherein those fixed thresholds that, if somebody is depositing money more than 15,000 OMR, bank has to report. It was very simple rules. So people will come up with smurfing techniques, structuring techniques, wherein they would just deposit somewhere lower than that amount. So it was very easy to launder money even with the rules. And the rules, then what they did, they started increasing the rules. They will put in more rules, 5-6 more rules around the same area. They will bring in more rules. Then what happens was the problem of false positives, wherein more and more reports were being generated because so many rules are coming in. The customer will fall in one of these rules, one of these conditions, it will fall, and then they need to report. So that was becoming another problem. Then FATF came up with a risk base. So you don't have a one size fit all for all entities or all countries or all customers. What you do is that you pick up a customer, you analyze, okay, what kind of business is he in? Okay. If it is a very complex organizational structure, then maybe he could be involved in trade-based money laundering. If it is a retail customer, then there would be different risk. If it is an HNI, then there would be a different risk. Okay, who are these people dealing with? If they are dealing with people that are located in tax havens or sanctioned jurisdictions, then they are high risk. What kind of products are they dealing in? Are they dealing a lot in cash or cashier's check, or are they dealing in cryptocurrency, which is the new anonymous problem? Wherein, so is what are they dealing in? That also. So these are the different type of risks that we'll analyze. We'll analyze geographical risk, we'll analyze the customer risk, we'll analyze the product risk, and based on that, we will formulate our audit plan. We will decide on what customers we need to focus, what do we need to do. That will be our plan based on the risk that we analyze. Okay. So now we come to the first case. Okay. So please listen carefully because now that game has started. Okay. So the context, you are auditing a mid-sized private bank in Muscat. While reviewing the top remittances recipients, you notice that one long-standing customer, Mr. A, has received over 40 inward remittances in last 3 months, totaling more than OMR 1,80,000. Okay. He is categorized as low risk in the core banking system. His profession is listed as a teacher, and his salary account shows a regular income of OMR 900 per month. So somebody who is listed as a teacher has a salary of OMR 900 per month, suddenly receives 40 remittances, and that too of totaling to about 1,80,000 in 3 months. So what do you think is the problem here? What is happening?
The fellow started from online classes.
Prize money, right?
Yes, this is very good.
This is excellent.
It's a red flag. Winner of big ticket.
Suddenly,
It's a red flag because in Oman, an employee is not supposed to do or engage in any other kind of business.
okay.
So it's you need to look into the details.
No, but currently we don't know where the money is coming from. We just know that money is coming.
From different countries, and it is, yes. Now transfer, okay, वहाँ पे आ गया है वो. 6 countries in 3 months, okay. So the transfers originate from 6 countries: UK, Turkey, UAE, India, Kenya, Nigeria. Okay. Now do you think that he's has started virtual classes which suddenly he is teaching something which people are paying 1,80,000 OMR from 900 OMR to what was he doing for so many years? But okay, when I'll give more facts of the case, when you ask that person, what is the purpose of this? Because a trigger was raised that suddenly so much money is coming in. So he gives very inconsistent, vague replies. Okay, he says that it is somebody's family support. Money is coming for family support. Some family member has sent me the money because 900 OMR is not doing it for me. So somebody is giving me for family support. It is a loan repayment. So he is giving all the vague answers. He says it was loan repayment. I had given somebody loan. Now they have repaid it. So this is the money from that. And one more, he's saying like somebody is investing. I'm planning a new business. So all things are happening with that person at the same time. So family is also supporting him suddenly. And he has given loan, which he never earned that much money probably, but he had given loan to someone. And somebody is investing in his business also. This is what he tells us. Okay. Further facts. Now the KYC was not updated since last 6 years. Okay. There was no recent verification, income documents, or there was no risk assessment also. Okay. He was still marked as low. because a salaried teacher, he was still marked. There was no KYC for so many years. So this is the real case. That's why I'm bringing in all the facts.
Sir, if the KYC is not updated, the account will be frozen.
Okay. But the KYC, it is not from this country though. I've just made it Muscat based, as I said in the beginning, that all the cases are based. This is from some other country. Now, please, next slide. Okay. Now, what are the red flags? Whether they are there, but still. First of all, the transactions are cross-border. Second, they are also from high-risk countries. Third, they are just, it is not possible that something is happening with so many people from different countries. Suddenly, so many people are giving him money. It is possible though that this person may not be doing money laundering, but he is running some other fraud scheme, some other scam through which he is getting the money. That is another possibility, which one should look at that also, because it is not necessary that he is helping somebody launder their money. There is another possibility that he is fooling people, conning people and taking their money. And that's why it is coming from different countries and he's getting that money. There is a possibility. When you ask about the purpose of remittance, obviously it is vague. That is another. The problem that we identified in this audit was that that bank which we were auditing, it did not have any process to, first, being the KYC not updated for a few years, they were still moving with that. And why they were not updating the KYC? Because that person was termed as low risk. So when in their system, the threshold for updating KYC was only for medium risk or high risk customers. For low risk customers, it was okay to not do any KYC, even for unless some major change appears. And these transactions happening, even that did not lead to any kind of enhanced due diligence, or no STR was either filed for this case. Okay, next please. So what were the audit procedures? So we looked at, to quantify all this, we looked at the remittance volume and we created a clear pattern that this is the salary, this is this customer profile, and this is what he has been receiving for past 5 years. This is 900 OMR coming every month, maybe some other money, small money coming in from some relative, which can be fully identified. So these are the bank transactions. And then suddenly this huge value coming in. So to quantify this, we had to create this whole pattern that for so many years, this is the money that is receiving, and currently this is the money that they have been receiving. We did a customer profile review where we looked at what is its profile in the system and does it match these remittances, which it does not, obviously. We looked at the internal policy. Now, such transactions should have triggered some kind of trigger should have come. You know, the system should have informed that suddenly these transactions are happening, number one, and it should have led to enhanced due diligence and KYC updation, which was not in that case. Okay, what would be your solution after this? These are all the audit findings, these are all the red flags. What would be the solution? What will you do? So, we are now discussing AML audits, okay? So, we are the auditor of that bank where this customer has been receiving these kinds of payments. And I have given you all the facts of the case wherein no EDD was triggered, KYC was not updated, he was still low risk, and bank was continuing. So, what policy changes would you suggest to this bank, or whatever changes, system changes, policy changes? Anyone?
So
Yeah.
you can personally call the customer
Okay.
and interview him
Okay.
and update the KYC and get the latest information whatever is required.
Okay. So KYC तो we'll update. Anyway, वो तो KYC तो update करना ही है. But we need some policy change also, sir, in this case.
So policy change would be that even low customer also, low risk customer also.
Yeah.
The KYC should be mandatory for all. Like it should not be like low risk means no KYC.
Right.
And
Right.
maybe policy might be there, but they may not have implemented. So implementation should be proper.
Right.
And
Okay.
they
Very
should
good.
have a proper software to identify such cases. So they might for low risk customer there can be different threshold.
Okay.
So based on that they can easily identify such kind of cases in future.
Right.
So it might be for HNI it can be a lower limit, but for low risk customer it can be a appropriate limit they can set. So in future they can identify.
Okay.
There is an unusual pattern of inward remittances.
Yes.
So that is something the system should trigger in this case.
There should be a trigger.
Inward or outward, anything.
Yeah.
There should be transaction monitoring.
Basically, it should be monitored over a period of time. When any unusual transactions are happening, even if it's a small spike.
Yes, but that should lead. That should give an automatic trigger, right? It should inform the compliance officer or somebody who is yes, sir.
Basically, if in your low risk
Yeah.
category,
Yeah.
once in a year, the customer with high volume
Okay.
of low risk should be ED once in a year.
Okay.
That is the big one because low risk automatically generally 90% cases are normal. There is no need to check.
Okay.
But those in a particular 1 year, high frequency of transactions or volumes comes to that had to be considered as a ED.
Okay.
So automatically that risk get recovered.
Okay.
Another thing could be the country from which the remittance is coming. Through that also red flags can be generated.
Okay.
So like as you said, Nigeria and some countries which are famous for these things.
Right.
For them it must be better control.
Okay. So what also? Yeah. Yes, sir. Yes, sir.
No, actually, see, this is like KYC, all this CFCS sitting in the bank, things are coming. You will be having all red flags only. Every transaction will be a red flag. Like if you see from Nigeria, any transaction like that. So there should be a limit. Say if there is a 900 salary is getting, there should be a proportionate limit you have to fix.
Right.
Say, see now you are talking about 40 transactions in 3 months.
Right.
So it's like it's happened in almost 1.5 months.
Right.
So there should be a limit. Say 900 means okay, 10 times or 5 times.
Right. Right. That is called dynamic rules.
You have to keep updating.
Yeah. So rules also change dynamically based on the. Yeah. So if one transaction happens for 10,000, 15,000 OMR all of a sudden, then the rule changes. That if another transaction happens on similar grounds, and if based on that rules keep changing, that is called the dynamic. I think that is what you're talking about, the dynamic rules. Yes, sir. You were saying something.
Also, the withdrawal should be monitored. Where is he acting as a Ponzi or something like that? He's acting as a middleman to transfer the money.
Okay.
And he's not actually doing money laundering, but helping others to do money laundering.
Okay. Okay. All of them are yes. Yes, sir.
I have a question.
Yeah.
How KYC will help? I am not able to understand. In case, let's say, even if let's say his KYC is updated,
Yeah.
still those things are there. So how KYC updated KYC can?
So KYC is just giving you the basic information about the person. Okay. So now the KYC tells you not just about their ID proof and their ID proof number. It also tells you that what profession, what is their salary, what kind of income they are. So it helps you create a customer profile. Now that customer profile is changing probably, but if there is no KYC being updated, so the customer profile is what that was 6 years ago. So now every year if you do analyze that, you would be aware of all these things better because probably things are changing. So in this case where these remittances have come in, there was a possibility that he might have gotten into some new business. As sir said that he started doing virtual classes. There was a possibility that he might be getting into virtual classes. And if he would have informed the bank that I'm getting into virtual classes and I'm going to get those remittances, then all this would not have been a problem. If he could have already justified this whole thing that this is going to happen with my account, then you don't need to follow so many procedures also. Bank would be compliant. My purpose is, when we are talking about AML audits, if the customer has informed that this, I'm getting into this business and this is going to give me these kind of remittances, it is fully justified. If I can convince the bank that it is how it is going to be and it is fully justified, in that case, I don't have to file an STR even in this situation, because I am already being informed, I am aware that this is what is going to happen. This happens a lot. I have seen in cases in India where some political person is involved. Okay, now they are dealing with crores of money which is coming from some other country, which could be high risk also. But what they do, they will tell the bank that I am going to receive this money from this country. And this is why am I receiving that money? They'll tell you the purpose of business also. What I have exactly done, we have provided those consulting services. They will share an invoice and they will share an acknowledgement from that party that, okay, we have received those consulting services and we are going to pay for those services. So now, as a bank, I don't have to do anything in this situation. So KYC being updated is good for the bank itself. We have to understand, very important is that even though morally we are supposed to prevent money laundering, but for the bank, it is only to comply. And for that reason, if they are not complying, if they do not have a KYC, updated KYC, it means they are not complying. And that is going to create a problem. So when we are doing the audit, we need to look from the perspective from the bank. I hope I answer the. Yeah. So do you think we need to file an STR in this? In all these facts of the case, yes. And new system recommendation, as sir suggested, there could be 2-3 things. One, that high risk jurisdictions, remittances coming. Second, not related to the customer profile. Customer profile is of a salaried teacher. Suddenly high value funds coming in. Even if they would be coming in small values, that could still be understood. It could be justified that he's doing some kind of business, but suddenly just coming from one person, and that is about 50,000 OMR. And then we can also set up a threshold. If the money is coming in more than this amount, and then we can have dynamic rules. That rules also change with the transactions. So this is all. Next slide, sir, please. So this is all basically what we did in that case. We filed an STR, updated the KYC. Risk rating was revised to high. System alert rule, as I said just now, those was added. Risk status has to be assessed. Once you have identified somebody as low risk, there has to be a process to make it every quarter, every year, periodically we need to assess the risk status of that customer, every customer rather. And again, this is also from the bank's perspective only. It is to safeguard the bank, because later on, if there is a scrutiny from whoever the watchdog is regarding AML compliance, and that time if we can tell them that every 6 months we check the risk status, we check the customer profile, it is documented. We check every customer, what are they doing, what is their profile, are the remittances and the fund movement happening as per their profile. When we document all that, we are safe as a bank. So as auditors also, we need to recommend the bank that you put this in your system. Have this kind of process in your system. So have you, any of you who might be into AML audits, have you seen such situation where a low risk customer, all this is happening? New, this is new.
So
Okay.
This is real case, you say?
Yes, yes.
So what was the ultimate reason for him receiving so much?
He was laundering money. Yeah. How? Somebody said how? Yeah. So he was.
What is the?
So. Yeah. Yeah. Yes. Just 1 second. So somebody there. Yeah.
There is no cap on the number of transactions because they did 40 plus transactions. There should be some threshold set that beyond this, there could be 1 or 2 genuine cases, but the 38 might not be. So does the bank not put a kind of threshold?
So it has to be whatever threshold that we'll be putting in has to be based on the customer profile. So as I said, that customer was noted as a teacher that receives 900 OMR. Now what would a teacher suddenly receive? Okay, there is a possibility that somebody from the family has given him money. Okay, so he can inform the bank, he can submit the KYC of the person giving him the money and his bank details. So bank can also verify that, okay, this was the purpose, somebody wants to give him money and it is his relative. He can establish the relationship also. He can submit documents to prove that that person is my relative. He is giving me that money for whatever purpose. And if he can explain all that, then there is no problem. But when we asked that person, he gave us vague replies that it is a family support, it is a loan repayment, it is investment. So if the transactions can be explained to the bank, then it will not be a problem. But because he could not explain it also, all 40 transactions were that were related to money laundering. Sir, you were saying something?
It's very common in this part of the world, like there is something called as blood money.
Yeah.
So for example, in Saudi Arabia, if you knock out somebody by a traffic accident or something like that, and then they file a case against you, there are 2 options, either to pardon you or to execute you.
Okay.
So the thing is that, like, if they want to pardon you, then you have to give them blood money that is equal to that person's from that day till the expected lifespan, what would have been his probable savings. That much your relatives have to send it to you.
Okay.
In that case, that will be a 40 transactions.
Not for different countries.
Amount.
And the other cases are plus 0.0 we have checked.
Okay. Okay, interesting. So you are asking how is he laundering money? So he is getting these remittances. We have not spoken about where this money is going. Okay. So it is basically the money is coming from people who want to launder their money. After the money has come, then he would figure out ways to give it back to them. He would withdraw it through cashier's check or something, and then he would give it to them, those people. No, he did, but we have not discussed it in that case. He of course did what next step also, but we have only spoken of the relevant aspect for our AML audit. Yes, sir.
It's only money moved from one place to the other place through banking channel.
Yeah.
Will it be called only as money laundering, or physical cash moving from one place to the other place also money laundering?
Sir, money laundering means you are cleaning your money. Okay. Any transaction can be just when you are moving a money from one bank to another. It can still be money laundering because that is probably a part of the money laundering, wherein there are 3 phases as we know in money laundering: placement, layering, integration. So in the case of layering, what people do is they move money from one bank to another, one country to another, different organizations, just to hide the original source of that money. So when we are moving money around, it is through banks only, through proper banks, proper bank accounts, registered bank accounts, but it is still part of money laundering. And just because we are moving cash, it is not necessary that it is money laundering. There are some cash-based businesses that deal only in cash. In India being an agrarian society, agriculture income is mostly in cash. Very little in. I have seen so many transactions where people who have a lot of cash, which is black money, not real agricultural money, corruption money, fraud money, some crime money which they have, they will disclose it as agricultural income. That is laundering. But if an agriculturalist, actual farmer, he has 5 crores after he has a big farm, he sold his produce and he earns 5 crores. It is not money laundering, even though it is fully cash. So it is all going to be case to case basis what is happening. Converting dirty money into white, useful money.
That's called laundering. So laundering.
Yes, sir. Yes, sir.
In this particular case,
Yes.
the recipient, do you think if he had updated his KYC,
Yes.
mentioning that he would be receiving so and so much
Yes.
in advance,
Yes.
do you think he could have avoided this investigation by bank?
Not in this case, because there's too many problems with this case. If he is receiving, he has to justify it, not just inform. If I'm telling the bank that I'm going to receive money from XYZ sources, I have to explain who are these people. This bank account has to be linked to somebody who is my relative or my investor, or if let's just say I'm saying that I'm receiving investment. So that money is coming, it has to be an investment company or somebody who has explained sources of income. If I am receiving money from a jurisdiction that is a tax haven and the bank account is linked to a company which was just incorporated few days back, the source of funds is opaque, you can't find out what the source of fund is. So then even if I tell them that I'm receiving this investment and it is not justified, even if I'm receiving an investment, it has to be from maybe one investor. Why 5-6 different countries, and most of them are known for money laundering, and he's not giving one explanation also in this case. In this case, he's saying if he could somehow, which is very difficult in this, if somehow he could have explained this whole story, why he's going to receive that money, then investigation could be avoided. Bank also does not want to do investigation. They are not interested in doing investigation. But in this case, because they did not do an investigation, we need to put it in our anti-money laundering audit that you have failed here. There is the audit, there is a failure in your system.
Actually,
I hope I answered the.
In this case, actually, you will be verifying from where you are getting that money. That accounts.
Yes.
Bonus also you get.
Yes, yes. Supposed to verify.
Okay.
When there is whenever funds are being received by our customer, it is also the duty of the customer to disclose as to what are the source of funds, where is it coming from, and if he cannot explain it at all, and then we also have to investigate or we have to flag it.
Okay.
Our first step is to flag it, because why should we spend our resources in investigating? It's the duty of the customer to inform us where the money is coming from. If they can't inform us, we'll just flag it. We'll file an STR.
So in this case, like all the scenarios are missed.
All this scenario are?
How the cases happen.
Yeah.
They didn't file an STR.
Yeah, they didn't file an STR. They didn't do EDD, they didn't update the KYC, they didn't file an STR. So after our audit, we found out that you were supposed to file an STR in this case. You were supposed to do an EDD in this case, which you did not do. So that is our comment.
Bank is not bothered about the source of the other side.
They are.
It will be done in EDD.
They are. They will ask them, and if they are not.
Investigation is not happened.
See, so the STR and the flagging off will just highlight cases needs investigation. All cases will not result into a problem.
Just sir, one second. So what happens is, bank is supposed to find out where, but what will bank do? Bank does not want to engage so many resources in looking for where the funds are coming. It will directly ask the customer, where are these funds coming? If he can give you a justifiable reason, if he can tell you where and for what purpose, then the bank will do a minimum due diligence. What he's saying, when he says same bank account it is coming, same purpose it is coming, if that does not match, it will file an STR that he is not able to give us the right information and we are not sure of the source of funds, so we are suspicious of these transactions, we'll file an STR. That is what the bank needs to do. Sir, you were saying something?
Yes, some regions allow the properties to be bought by cryptos.
Right.
So under what category this falls?
just if a property is being bought by crypto, it does not mean it is laundered money. The purpose of cryptocurrency is, the problem with cryptocurrency is that many countries do not have a very strong regulation with respect to cryptocurrency. So where there is not a very strong regulation, people can anonymously purchase and sell cryptocurrency. So this anonymity which cryptocurrency offers, that can help in money laundering. But if a country has good regulation, so any exchange, anybody who is dealing in cryptocurrency has to declare their source, has to declare their identity, need to do a proper KYC. In that case, it is very difficult to launder money through cryptocurrency. And you are talking about real estate. So AML is applicable to real estate companies also. They also need to identify who is paying, what are the source of funds, where is it coming from, and they also need to have a KYC of where the funds are coming. So if they are taking money in crypto, they are required to do the KYC, and if they cannot do the KYC, then they need to file an STR. That we are not able to identify the source of these funds, and that's why we are filing an STR. I think we'll go because there are 10 cases, and because these discussions are very fun. So okay, so quickly we'll go to the next case. I'll give the context. Now you are conducting an AML audit at a large money exchange company in Oman. Okay, the firm offers remittances services to various GCC countries. While reviewing high volume SME clients, you come across a firm, Zara Traders LLC, that shows an unusually high number of outward remittances to 3 related parties in UAE and Bahrain. The transactions are consistent in value, say OMR 9,800 to 9,950, which is just below 10,000 OMR, and frequency is 3 to 5 times per week, just below reporting thresholds. Declared purpose is payment for services rendered. Okay, so first comments, payment for consulting. What do you think? First, somebody is paying for consulting through your money transfer system, money remittance system. Why do you have to pay just below 10,000 3 to 5 times a week to the same vendor? If I have to pay 30,000 OMR to a person, why will I do 4 transactions of 9,000, 9,000, 9,800 and like that?
Maybe you're seeking on the number of remittances or the amount that you can transfer from area or something.
Milestone based payments. Okay. So this is what sir is saying, that this is a coincidence that the less than 10,000 OMR, very close to 10,000, is they have milestones. So if they have to pay around 35,000 OMR in a week, but when they do, like in 2 days they achieve a milestone, then they will pay 9,000, then in next 2 days we'll be paying another 9,000, which is not impossible, definitely possible, but highly unlikely.
Or it could be like, no, you have a limit, there's no signatory, only 10,000 is a signatory level.
No. That is not the case here. Yeah. Yes, sir.
Or he is familiar with the threshold of the whole bank, he is splitting the transactions and he is paying.
Yes. He knows that. He knows that if he does, if they do a payment of more than 10,000 OMR, then they will not get flagged. Then the bank will look into the transaction. Earlier, they were not looking at the transaction at all. So when they have a threshold, they have a rule that whenever transaction is above 10,000 OMR, then they need to look into it. What is the purpose of this transaction? Why is it happening? So they don't want the bank to even look into it. And that's why they are just, and they have informed the bank also that it is for consulting services. We are paying for consulting services. So if you get confused why suddenly we are paying for consulting services. Okay. Then, so we realize that this is some kind of a structuring wherein we are just remaining below the threshold. So we did, when we realized that this was happening, we, even though we were not required to investigate for less than 10,000, but we realized that this is a structuring transaction. So we looked into where those payments were going. Okay. So I'll give you more information. So the 3 companies that were receiving the funds, they had overlapping directors. So again, same management, 3 companies. We are paying them small amounts just below the threshold of investigation. Like below 10,000, we are just paying to 3 companies, which we can pay to 1 company also. But we are doing these payments to 3 companies so that it does not raise any suspicion. And later when we investigate, we find out that those 3 companies also have overlapping directors. It's the same company. Okay. So then we asked the client as to what kind of consulting is this that requires such milestones of 2 days to 3 companies. And the client was, in this case, obviously not prepared. So he could not produce any contracts, any proof of services that were being rendered to him. So that is what happened. Then we investigated further as to how the funds were moving. That he was paying them for consulting, what was happening to the funds after that. Now we need to take help from other banks in those. Now a sample tracing of funds showed that the funds were rerouted to another company in Oman within a period of 6 days. So what do you think of this? So I pay 9,000, 8,000, 9,500 OMR in a week. So say some 30, 40,000 OMR to 3 different companies. So there are 2-3 points of suspicion. One, that the amount is less than, very close to 10,000, going to the same entities, and at the same time it is going to different companies, but when you investigate you find out that the directors are overlapping. So it is actually going to the same. So why it was sent to different companies? Just to avoid the suspicion, just to avoid the investigation. And then further you follow the money trail, you realize that the money, it just goes to their account and then it is transferred to some other company and then back to a company in Oman. From all the companies, it comes back to one company in Oman, which we later found out that was controlled by this person only. And other thing, when we are asked about why you are paying so much money for those consulting services, they do not have any answer. Just vague, this is consulting, we do not have a service contract. If you are paying 40,000 OMR in a week, it is not very small amount of money. So do you do business like that without a contract? No, right? A very, very interesting case is coming in my head. But the problem is that we are very short of time. A very interesting real case of money laundering only, which is not related to this. So I think if by the end of the session, if we have 5 minutes left, I will talk about it. But let's move forward then. So what are the red flags that we identified in this case? I just told you.
Below threshold.
Number 1, below threshold. Multiple companies with same directors. Money coming back to Oman. And no supporting documents. So these are all the red flags that we have identified. Structuring, then layering, cross-border transactions coming back to the same country, circular transactions. These companies also, they were identified as shell companies, did not have any other source of funds. These were the only funds that were coming in. And there was no commercial rationale. I mean, what was the purpose? What was the service? Yes. So sometimes what happens is that those who are committing, who are doing this laundering of money, they are not that smart. So rather, I would say we are much smarter than if we were laundering money. If I was to launder money, it would be very difficult to catch me. But you consider a layman, a businessman, he understands few things about laundering money. So when they do it, they are not that sophisticated. So they do whatever they know. They know that 10,000 ke upar it will be caught, more than 10,000 will be caught, so they will just keep it below 10,000. Instead of keeping one company, they will move it to 3-4 companies. And it's going to another country where there is some secrecy, so they think that it cannot be traced back. The money has come back in this. And those companies are shell companies. So they say nobody is going to investigate only, no, because it is below 10,000. So how will they know that it is a shell company? So that is the reason why.
The problem is that those who know doesn't have the money.
That is a very big problem. Okay.
You can also do that consulting, 9,000.
No, I have money, but I don't know how to do that.
You also do that.
Okay. So what this was again the red flags. What would be the audit procedures that you would apply? Now, you have identified these transactions. You are having the high suspicion that these are money laundering. This money laundering that is happening. But you need to document all of this before even filing an STR or before giving comments in your report. You need to document all of this. So what process would you be following? Anyone? Auditors?
The threshold should not be fixed amount. It should be a range-bound amount. Plus and minus the threshold limit should be considered for audit.
Okay.
We'll aggregate the transactions in a particular period.
Okay.
Yeah.
Okay. Okay. So what procedures you should apply, which we had applied, were, of course, mapping all the transactions to what entities. Then we also looked at those public registers of those companies, which we found out that the directors are overlapping and the companies were incorporated very recently and there was no other source of funds. So all these you need to investigate. And when you are writing your audit report, you need to include all these things. Where do you come up with? Just because it is a structuring transaction does not mean the more evidence that you gather, it is good for your report.
Like what we are doing for the customer, know your customer, we should do also KYB for the business.
Yes.
Know your business.
Yes, yes, correct. Okay. So the resolution, what is the solution to this? STR to file, we have to do in every case. Every time we have filed an STR. This I'll tell now only. In all the cases, there is an STR which is going to be filed in the end. Okay. Other than that, we had to end the relationship, suspend the relationship with that company because we could prove when you do prove that somebody is involved in money laundering, not just filing an STR, it is better for your bank to suspend the relationship till it is being investigated by the enforcement, because it is not required, by the way. Your requirement is to only till filing an STR. Only if you are informed that this person that you are dealing with needs to be sanctioned or is a risky customer, or you need to terminate your relationship, only then do you need to terminate. But it is good for the bank when they feel that it is a very risky customer to suspend the relationship or terminate the relationship. So this is a very subjective issue. Many banks will not. Many banks would want to, they have done their part, they have submitted the STR and they might continue doing business with them. But later on, it could, when there is a compliance audit being done for the bank, it could come up that, you know, you were fully aware that this person is laundering money and you informed us, but you did not, you still continued helping that person laundering the money. So you should terminate or at least suspend the relationship.
Sir?
Yes, sir. Yes,
I
ma'am.
observed here that we are doing more STR. Why we are not doing SAR? Because in this case, like it's per activity. For example, if you see the category, it's consultant.
Yeah.
So here we can consider the consultant under, for example, high risk rating. So it will be per activity, not per transaction. So
Okay.
we have to do both of them, I believe.
Yes,
Or
yes.
is it?
No, you have to file an SAR also in this situation. Yes.
Just to understand, as an auditor,
Yeah.
how much we should go in depth in such cases, up to which level, let's say finding the purpose or where should the auditor?
So it is again a risk-based thing. Okay, so when you are looking at risk, you realize you come across 2-3 things. First you came across that it appears like a structuring assignment. Then when you ask the client, customer, he gives you vague answers. He does not tell you what exactly has been going on, what are the funds for, what is happening. So that is the second thing. And third, then in that case, when these two things happen, it is your duty to investigate further as to where the funds are going, where whatever you can do. Or if you don't want to investigate, you can file.
Exactly.
If you don't want to investigate, you can just file an STR also. That is again your call. Now what from a bank's perspective is, what happens is that bank does not want to lose the customer. They would rather just investigate. Because if they just file an STR immediately, then you need to probably end the relationship or you cannot continue with that. Something has to be done or the customer will go. So they want to still keep the customer, they want to give as much benefit of doubt, they want to figure out what is going on. If the customer is not able to give you the answers, you still want to find out somehow so that you be in compliance, you don't have to report it. Once you report it, it's gone. So probably you are going to lose that customer and it is going to be a loss of business for you.
So maybe in this case, we should consult the bank managers or somebody, whether we should proceed.
You need to consult AML experts for
I
that.
mean, whether to proceed further or not in this case.
Exactly. You need to consult an AML expert as to, are you complying with the law? When in this situation, should I investigate further or should I file an STR? You need to think about it.
Yeah, but as an auditor, we should decide or we should consult a manager.
When you are talking, I thought you are talking about from a bank's perspective.
Yeah, bank's perspective.
Or an auditor's perspective. Bank is a different entity.
No, I mean as an audit, because we are appointed by a bank, right?
Yes.
Correct. So that way I am saying, if bank thinks that okay, don't go further, you report it. So why to go further?
No. There's some confusion. So the bank has to report it. You don't have to report it. It was the bank's job that they were supposed to file an STR or they were supposed to file a report, but they haven't. Okay. So what you have to do is, you just have to see if the bank has complied with the law. So if the bank has not filed an STR, were they justified not to file that STR? You have to comment on that. So you have to see, okay, bank did some procedures. Bank checked where the funds were going. They were actual consulting services. They had all the invoices, everything was in place. They were an actual consulting firm where the funds were going. That's okay, don't need to file an STR. But when either bank did not investigate or after investigation it found out that these transactions were not genuine. One of these two things happened. So if they did not investigate, that is again bank is at fault. You have to report that in your audit That bank was supposed to investigate, did not investigate. Second, if the bank investigated and still found that these transactions were not right, they were supposed to file a report, which they did not file. Again, you need to report that you were supposed to file a report, you did not file. Then we file the report. I mean, you make the bank file the report at that time. But you mentioned in your report also that the report was supposed to be filed, but it was not filed. STR was supposed to be filed, did not file.
Both we have to report as a bank.
As an auditor, you need to see, you have to just do your audit. In your audit, you need to see if we have complied, the bank has complied or not complied. Yes, I think we are yes, very short of time.
Which is actually very interesting.
Yes.
Can go till 10:30 also.
Yes. So let's go to the third one, and
Gold rush.
yes. So during the AML audit of a high street jewelry retailer, so normally we are doing AML audits for banks only. This is precious metal. Though they also need to comply.
This is applicable only for banks and financial institutions?
No.
Let's say I work in an auto dealership.
Yeah.
Let's say tomorrow a customer comes. He is an expatriate, let's say from Iran, and he deposits cash worth 100,000 real. He wants to buy Rolls Royce. As an auto dealership finance person, should I carry those checks, or if will it make a difference if he draws a check for that amount? So can I just assume that he has the income, the concerned bank must have done the AML check, so I am not supposed to check what you are doing, whether consulting, all that.
So in AML laws, you have designated very specific type of businesses that need to comply with the KYC and the requirement of source of funds, and whenever there is some kind of a suspicion, they need to report. So when they have defined those specific people, for example, those dealing in precious metals, the case we'll be discussing, or DNFB, exchange houses, insurance companies, money, all those they need to comply. All those they need to comply very strictly.
Sir, you will sell the vehicle, but when you are depositing the money in the bank, then you will be asked.
So I got to buy it.
You are the seller, right?
If you have a suspicion,
You are the seller, right?
you should.
So the problem is,
I am bringing somewhere.
Yeah.
I took the car. When you are depositing the money back in the bank, they will be asking.
So bank may not ask them, but they should do the KYC of the customer who is paying
I am
cash.
asking whether we should do KYC.
Yes.
no. So the point is, legally, we have to look at it in the Oman law. Is there anything very specific? I'll honestly say I'm not that an expert in complete Oman law, but we have to look at it. If there is a very specific mention to for entities that are not specified, what do they have to do? Then if there is some kind of a requirement, it would be of course less than these other registered required specified entities. It would be less compliance than that. But if there is no specific requirement, then you can get out of it. But I don't think an auto dealer could get out of this in this situation, because they need to have the record, the minimum KYC. They probably don't have to give a suspicious transaction report in this case, but you need to have a KYC. So in your annual whatever sales you have made, okay, you need to have a record of what was done in cash and which person brought you that cash, and the property, the car was sold in whose name. All that record you need to keep. Probably don't have to file a STR, because it is not in the money laundering law related to your business. So you don't have to file an STR in this case, but you need to keep that record as to who bought that asset. When they are giving the requirement of filing STR, it is only very specific to those entities that are very high risk related to money laundering.
So as an auditor, I can just check whether customer name ID copy, all those things
are there, and they can be verified. I mean, if you check that ID through sources, it does not lead you to any vague transactions.
But can you sell to anything to Iran?
No sanction country.
Just add the source of the fund. Usually the exchange are doing what is my source of the fund.
No, so there is in India there is this, political donation. Okay. So political donation, if you do, you get exemption in your income tax. So what happens normally is, if you do a donation of, say, 1 crore, what normally these parties do, they will charge you some percentage. They'll charge, say, 5%. So they will give you 95 lakh rupees in cash, and they will give you a certificate, because you will transferring through bank. So you get a donation certificate for 1 crore. So you get a tax exemption from your income for 1 crore for 5 lakh rupees. So say 30% tax. So you get 30 lakhs by spending 5 lakhs, and rest is converted into cash. This is a very common practice. Okay. Now everybody knows that. Even the government knows that, income tax also knows that. Same thing can be done when you are giving a donation to an NGO. But there is a problem. And when you give donation to an NGO, they have a requirement to spend approximately 80% for some charitable purpose or the purpose of the NGO. And they have to prove that they spend that. They have to build hospital or something has to be done. Okay. Now, first they have to prove that, and when it has to be scrutinized, it can be scrutinized. It is a very stringent scrutiny when it comes to an NGO. So when there is an NGO and it has received donations, the income tax department does very serious scrutinies when it comes to NGOs as to exactly if they spent the money. But a political party, the income tax department is not touching it. So if you go to a political party and you say, what KYC do you have? Why was this donation given to you? Do you have any information on the source of funds? From where did it come? They will give you no answer. They said, this come from this bank account. This is the person who came to us. He submitted his PAN card. We noted his PAN card. We gave him a certificate and we received the money. That's it. So this is the difference wherein some sectors are not even bothered about it. So it is dependent on what is in case of AML, they are fixing some high risk. So in your case, like in the auto industry case, you just have to keep a record of where the funds came from and who was the person who gave you the funds. Because it is not specifically mentioned that you need to figure out what was the source of funds for that person. And also there is no specific mention that you need to file an STR when there is suspicion. So you don't have to. But if you want to, you can. If you want to, you can. That is your choice. Okay, so gold rush. During an AML audit of a high street jewelry retailer, Noor Gold and Gems, you notice unusually high volumes of cash sales recorded over the last fiscal year, totaling to OMR 3.8 million. These are spread across hundreds of invoices, most of which are below OMR 15,000, threshold that triggers mandatory reporting under local AML regulation. The store is registered as DNFBP but has never filed an STR or threshold transaction report. There's another TTR which can be filed. So what do you think of this? All the value mostly in cash, transactions are being done in cash, less than 15,000 OMR, which is the requirement. If there is more than 15,000 OMR in a transaction in cash, then you need to file an STR for that transaction. So is this another case of structuring?
Yes, classic case of.
But they have all the invoices.
Sir, beneficial owner, as you check.
She is from jeweler.
Okay.
And you took that name only.
अच्छा वही है क्या?
Not the rule though, but and 95% of our bookings, or not 90, 80% our business is in the cash only.
Okay.
Because of the card charges, the
Okay, okay.
The ID copy, even though it is cash, they take
of course, the bank charges, who
Yeah,
is going to
1%
spend on the
bank
bank
charges.
charges. So what we do is the KYC which we have to do it, and most after of course ID card we see, so we'll come to know the salaried employee and all. So most of the transactions will be below the threshold only.
Okay.
Because people are not buying the high.
So it is not unusual.
Okay.
On the face of it, it is not unusual.
Okay. No, my point is from the dweller's perspective. Okay. If I am having transactions below threshold, say 14,500, 14,000, all the transactions, then as per law I am not required to file a STR. क्योंकि उसके लिए there is this one threshold is given. The rule based system is already there that 15,000 OMR crossed, you file an STR.
No, not like this, I think. You investigate, and if you suspect, then only file STR.
Yes.
Not that by default it is crossing 15, you have to file. I don't think that's the rule.
No, here the cash limit is there. You can't accept the 5,000, above 5,000 cash in this thing. If you are accepting.
So you cannot accept only.
Yeah. If you're accepting, then of course you have to do the.
So above 15,000, there is not filing of STR, but there is a reporting that you need to do.
No, you have to do EDD.
EDD has to be done, but even if
Filter the flag
The
transactions.
STR itself means suspicion. Whatever
Yes.
be the amount, if you are not suspecting, that is judgmental on you.
right, no. So what I'm trying to say is when it is more than 15,000 OMR, you need to inform.
Yes, there are definitely.
It is not. It does not mean that it is suspicious or it is.
Yes, I agree.
You just have to inform that it is more than 15,000 in cash. We have received more than 15,000 in cash from this party. So that's why we are just informing that this is our requirement to inform that this is more than 15,000 from this one party we have received for purchase.
That it's not suspicious, but as a.
Yeah, when it is suspicious, then we'll mention. But if otherwise we are just giving that information that we have received for more than 15,000 from one single party for the purchase of gold. And whatever their source of funds is, that is for the regulatory, they have to invest. If they want to, they can investigate. But we are informing that we have received more. So in this case, everything is less than 15,000. There are n number of invoices. Okay. So when now being the jeweler, are you required to look into these transactions? Okay. And there is a very high possibility that that jeweler himself has manipulated the invoices to make sure that they fall below the threshold, so they don't have to report anything to anybody, and keeping it below 15,000 but very close to it. So as an auditor, when you are auditing, you see all this. What are you required to do? Yes.
Whether it is coming, purchases are done from the same person or not, same entity like that. So they can see, for example, one person only would have purchased maybe 100,000.
Yeah. So this is what we should do, right? As an auditor, we should look into these transactions. That is what you are saying, right? Yeah. Okay.
We
Now,
should file an STR against the jewelry shop as an accountant, because I got suspicion on the jewelry shop.
Right.
Forget about the AML audit. That will happen. The STR, the ROP will do that.
Okay. Yeah.
I mean, it could be, right? The jeweler himself might be involved in doing AML.
Right.
Showing all this to.
Right. So, but are you then, you being an auditor, are you required to file an STR for this audit client?
Not like that. We have to investigate, and then if you find something, then only.
No, but you can file an STR also.
we can file.
You can, because you are also DNFBP and that person is your client. You being an accountant,
We are liable if we find.
if you are doing an audit and you find of whatever client you are auditing and you realize that this person is involved in money laundering, you can file an STR.
Provided we don't want the audit next year.
Yes.
I'm not coming to you, Bharat Ji.
So as you said that we should investigate, and we find out that customers were frequently splitting those. So one customer only buying more than 1 lakh OMR. Yes, sir.
See, also the software used for billing should also be checked thoroughly. So there is a help of some expert to find out that whether there has been some downtime or something. They could have tampered it with some consulting, IT consulting, so that, like, as you said, to keep it deliberately below 15,000, and then they could have adjusted by way of some credit notes or something like that. So from that angle also you have to see.
Okay. Interesting perspective.
Book confirm, mostly.
Otherwise, why is he not declaring the STR?
Okay.
All software should have that logs.
Let's complete the case. We'll discuss, sir. We'll discuss personally. Yes, sir.
Maybe the audit himself has suggested to do this type of.
That is very speculative. That is auditors never do such things, sir. Auditors are nice people. They never. Auditors are the most moral people. They never do such things. Okay. Then we look into those transactions. We see that there are one single customer that has been splitting it. Okay. Now, even though they are receiving cash, okay, they have not kept any KYC. Probably there is a threshold for that also. That if you are receiving more than 15,000, so you need to have the KYC of that customer. But this person has not kept any KYC because it is less than 15,000 from each customer. Okay. Only invoice books, no KYC documents. Okay. Then then we found out that which is very common. Probably you could relate to it. We have seen it in many cases that DNFBPs, they do not have a very documented AML policy or proper AML training for their accountants or people. It is very, very common that they don't do that. So there was no AML policy. And large volume of cash purchases were treated as normal because it is understood as part of business. But they did not even maintain the KYC because there was not coming in the threshold. Okay. So what were the red flags in this case? Okay. Just very close to the threshold. That is also one thing, that when you are supposed to do KYC above 15,000, when you are supposed to report above 15,000, all the transactions are somewhere very close to 15,000. That is also one stupidity that many people do. They keep it very close to it. If they are breaking it also, they can break it to some 6,000, 7,000, then some 14,000. But always keep it near 15,000 only. It becomes काम बढ़ता है, number of invoice. But again, if you want to, sir, we should complete this.
They should take an advisory on what to do. So there should be a business session. They can take an advisory on how to do it.
Yeah, they can. But no, we don't help people launder money. It's a very heinous crime. Yes, money laundering is a very heinous crime. So honestly, we don't help people launder money. So there was no staff training. There was no STR filed, no TTR filed. There were when later on when we traced, it was found that multiple transactions were done because they could not create random names. So they were not disclosing any names, they were not creating any KYC, but they had kept a record of who is buying. And then when they were questioned in detail, they came up with, okay, it comes out that they are the same people that have been buying. So obviously what procedures we performed, we did we checked those invoices, we checked, found out repetitive buyers and same phone numbers, same delivery address. At least some information, if you start digging deep, you will come to know. And when he conducted staff interviews, we found out that they had no formal AML training and they were also informed to do this. They were asked to, if somebody is buying for 30,000 OMR, just make 2 invoices. one of 14,000, another of 40, another 14,000, like that. A resolution was, filing an STR. And then there was after that proper AML policy was created, staff was trained, and as sir suggested, which we did not do, but we should have. We should have filed an STR against the jeweler itself. But again, that was not done in this case. We gave them recommendations. We asked them to file the STR for all the customers who had bought at a lot of gold for like 2 lakh OMR or something, that value of gold in cash. So for all of them, STRs were filed, and AML policy was drafted for the jeweler, and trainings were organized, and they were asked not to do this again. But we could have filed an STR against the jeweler also. In this case, being the auditors, we could have filed. Okay. So I think we'll end here. I had a few interesting cases, but again, I did not plan the timing that well, I realized. I thought I'll be just discussing the cases and they will be over very quickly, but the discussion sometimes they go beyond.
It's more fun this way.
Yes. So probably for the other cases and more cases for some other time, I think. Yes, I have shared it with sir. He can give it to you.
Can you share the slides of
Yes.
You can go through the subsequent ones.
Yes.
Sir, question.
Question nahi, sir is going to get the book. He gave such starting says such good, and he has been the most. What is your name, sir? Parth. Parth has been the most. नहीं, मैंने starting में बताया था. He has been he won the game when he said that he started virtual classes in the first case itself. That time only I decided.
One book for milestone also.
Yes. Okay.
That
Yes.
one also very good.
Yes. So I would get for sir also I'll get a copy of the book, but for time being in this contest he has won. Parth has won.
Now you should give, sir.
I have one copy. Yes, I have one.
We want to be witness.
Yes. I'll give one. So I'll just a second. So I think we'll conclude this session here. Okay. Thank you so much. I hope you all learned something new at least today, and you had fun. I had a lot of fun. I really enjoyed interacting with all of you, and I also learned something new. Like sir also taught me something new. Many people taught me something new. It was very interesting for me, and I hope you also enjoyed it. Thank you. So I'll just take a copy.
Mr. Chairman, I was thinking this.
Keep going from
Thank you so much.
Yes, sir.
We had an exhilarating session. I mean, we didn't have sufficient time.
Yes.
Probably we should have one more. So the next time somebody wants another session, we'll let you know when Bharat is in town.
Yes, sir.
We'll have one more probably online if you can share it.
Right.
Now I will call upon Mr. Badri Subudri, Badrinayan Subudri, Vice Chairperson of ISACA Muscat Chapter. He is also the Secretary of ICAI, so it's a double bogey. So please to welcome him and then Badri will.
Good evening. Half of the crowd are only here. From the full house to now half of the house. Maybe few it's already late, so few of them have already left the room. But the session was very interesting. Thank you, Mr. Bharat, for enlightening us about the AML audit. It was so engaging with 3 case studies. He could be able to take us through the most part of the AML law related to Oman, more specifically. I thank the member for attending for within a short time, and the house was full. It shows how committed you are to understand about the AML audit part. I thank our sponsor, College of Banking and Financial Studies, under whose umbrella we have been functioning in Oman. So thanks to Nagesh, the photographer, and his team, and also Beyond Kitchen for providing us the snacks for this evening. Thank you once again to all of you for attending this session. Please sit back for a few more minutes to felicitate our speaker, and group photo also at the end. Thank you.
And now I would like to call upon the Vice Chairperson of SEA and Vice President, the Chairperson, rather, sorry, my apologies, Chairperson and Vice Chairperson as well, and our Vice President to felicitate the speaker.